J. Michael Williams from Crossroad FX. Oh, Bob Pardo. Bob, he likes to be called Bob, I understand. Yes, and please take the stage.
Well, guys, come on up. We had a very lively conversation before this about the subject, and I think it's going to be very interesting. I'd like to just kind of frame this because essentially, all of us who have been in the business know that it all comes down to, how fast your computers are, how fast your internet connection is, and how good your software is. Those are the three moving parts. We all also know that computers just get faster and faster as do internet connections, and sometimes software gets better and better, but not always. So those are the three things we have to optimize to make this thing be maxable. And each of the gentlemen here will speak to the issue of smarter versus faster. Jeff, do you want to lead it off? Why don't you guys each spend about a minute?
Yeah, why don't we just introduce ourselves? So I'm Jeff Birnbuam, CEO and founder of Securities Technologies. I think most of my comments you'll hear are going to be talking about software because that's what I do. And in terms of this topic, so my background is EE, electrical engineering, but mostly as a software programmer. Started writing code when I was a young kid. Worked on the street for 20 years, Wall Street that is, in New York, and started a company a few years back called Securities Technologies to try to redefine the database world. So in my view, the database world is fairly static over the last 20 or 30 years, and it's missing one component, which is real time. And it's real time both in the flow and query of data, but it's also...
This is the intro, not
yeah.
Okay, so.
But it's also about real-time aggregation of data.
Hey, I'm Gil Tene. I'm the CTO and one of the founders of Azul Systems. At Azul, we make Java virtual machines. I'm also a EE, mostly software, programmed as a kid, but didn't work on that same street. So I spent my time building infrastructure things, everything from pieces of hardware and software and firmware and operating systems, and I've been spending my time building JVMs for the last decade and so. At Azul, we make JVMs that basically eliminate the latency noise, the latency volatility in Java, and make Java equivalent to other environments as far as latency behavior in software at least. And that's what we do for a living. And as a result, I spend a lot of time looking at latency behavior, whether it's about being fast or being smart or being consistent. And I go around preaching about it some too.
Tony Pettipiece of Cape City Command. We provide custom-built appliances that reduces latency for electronic trading. My background is IT for trading and then trading. And what we see in the market is everybody's throwing hardware, software, FPGA at the problem, but they're not truly addressing it in real time. And we think we have solutions that deal with that. I think we're going to talk a bit about that here today.
Hi, I'm Sandeep Tyagi. I run a firm called ST Capital. ST is a CFTC registered fund in US, but we also have business in Asia, and there we have a fund, but we also have a proprietary trading firm which trades in India, Singapore, and Dubai. So I guess since everybody mentioned that, my major was computer science, but I'm much more in the business side of it and want to see how faster can be used effectively while being smart.
Well, Jeff, you want to kick it off?
Yeah, so thanks, Bob. We're talking about faster versus smarter, and I think where I wanted to center my remarks, how many people we have in the room that program systems today try to make them fast? A few? Okay, so there was the previous speaker was talking about how things have gotten faster, and what we're up against in the software that we build and the customers that we see is a lot of people talk about low latency, but they don't talk about overall system latency. And what we see is there's a lot of discussion about a communication link being low latency or this being low latency. But in software, to make a system low latency, you have to pay attention to all of the components. And I often hear people talk about the proverbial 80-20 rule when they're building systems, which is that they're only going to attack what they perceive as 80% of the problem so they can get the biggest bang for the buck. What my 20 plus years in this business has taught me is that if you want to make your system fast, unfortunately, you have to pay attention to all of the details and all of the components of the system because it's a zero-sum game. If you have pieces of your system that are slow, they are taking cycles from another part of the system that you need to go faster. And so oftentimes we'll see pieces of code, threads or whatever, that don't count. People don't think they count in the overall, but they're sucking out cycles that can be used to make other things go faster. And so I think I wanted to start my remarks there, and we'll get into some good questions around some of those things.
So I look at this faster, smarter question, which comes up in panels like these all the time. From the point of view of what are you actually trying to achieve, and in trading it's all about winning, and the reality is being fast at making dumb decisions doesn't help anybody, and making smart decisions and never getting to be first with them is also not going to help anybody. It's a combination of the two, and it's the right balance and the right trade-offs, and which one is it right now doesn't depend on just what the market does. It depends on what your weak spot is and where the opportunity is and where can you move fastest. I like to talk in terms of how fast you get fast, because computers keep getting better, software gets better, we build stuff other people use, but there's a time to market, to the actual market thing. And often people will look at something and say, look how fast that is, and wow, in another year Moore's Law will move on and we'll be able to do even better. But the question in a race is who got there first. And if I can get there first by being more productive, by getting to market in 3 weeks instead of 2 months with something, if your algos can shift around the right way and actually be productive, then you get to apply the speed at the right time, and maybe your competitor could have done it faster, but they're a month late in doing it faster, and that's latency as well. So I like to look at when did you get it fast and how much effort, how much money maybe you stunk into it as a big part of it.
Cost too.
Yep.
The trade-off.
What we've seen in working with clients is that there's a great focus on throughput and having the fastest devices, coupling them all together and testing it. But a lot of people don't seem to realize the variation in latency in real time that's happening within their systems. And without talking too much about what we do, we actually capture that and allow people to do something about it in real time. And people don't seem to realize the value of that, so they will often ask, well, what is the value of a microsecond or 10 microseconds? And by testing and evaluating, we can show them what that is, and it can substantially reduce the latency in real time. I like to say everybody talks about it, but nobody does anything about it, and we're talking about it here. Hopefully people will do more about it, but you have to be aggressive, I think, in pursuing it proactively, not just testing in the lab and then see how it works.
Well, it does sound like we're all saying the same things in different kinds of ways. And now we have Sandeep as a user of this.
Sure. So that's the problem with going last on any panel. I agree with all of them. I think if I were to paraphrase in my terms what I heard and what I agree with, I think the first point was look at the whole system, not just any component of it. I agree wholeheartedly with that. The second point was, of course, it's not either or. You can't be faster and dumber, and you can't be smarter and slower. And the third point was, when you're looking at this, don't look at median, look at 99.9 percentile, or look at whatever the variability on that latency or smartness is. I agree with all three. So what I would do is, my sense of this is, generally I would say as a user, particularly in emerging markets across India, Dubai, Singapore, our sense is being smarter. Being fast is always good. I have no dispute with it. I think there are plenty of people in the room who are doing this. But being smarter sometimes is essential, because the magnitude of time, the time it takes for data to travel between Dubai and India or Dubai and Singapore and CME is in 100 millisecond range. So the type of time we're talking about is much larger, and there are many larger buckets out there. I will tell you a quick anecdote to put in perspective of which side I fall on. It's from mythology. Maybe it'll change the tone a little bit. There's a famous god in India who had two sons, and there was a debate, which one is better? So he said, there is a test. I'm going to ask you to go around the world, and whoever circumvents around the world and comes fastest back to me is the winner. So the first son was very aggressive, got up on his peacock, which was his animal, flew around the world and came back, but saw that the other son was sitting in the lap of the god playing. He says, well, how did you get faster than me? You're much slower. He says, well, my world is my dad. I went around him, and I'm here. I'm done. I didn't have to go around the earth. It's how did you define the problem? So to me, sometimes being faster but being dumber is the problem. We all get the first order. The fastest guy will get the best bid, best ask. Great. What after that? If you're trying to move 100 million, it's not that easy. If you're trying to trade into the market, it's not that easy. And getting that one tick advantage in microseconds is a game, but it's a limited game. There is a much bigger trading play out there. That's my view.
Well, speaking to that point, I realize, we don't trade high frequency. We trade more on a much slower time pace. And so consequently for us, latency doesn't even matter because we don't, and plus we can afford a lot of slippage anyway, even if we get it. So there's always the question also of, there's been such a compression and competition in the prop trading space in Chicago, which is pretty much the center of it here. There's been so much competition, a lot of the firms are going down because they just can't, their old models just don't work anymore. So I think the issue of, it's obviously the issue of faster software, faster computers, faster connections. That's the so-called arms race, and it is an arms race, and it really goes to the guy who's got the deepest pockets, generally speaking. It makes me realize, though, that at first, when they first started doing prop trading, it seemed like these guys just couldn't print money fast enough. Now that it's actually changed, it's become very competitive. It really comes back to the good old question of, you really have good trading algorithms? And Sandeep, you really addressed that's part of the issue here. So do you guys each want to go over in terms of what your particular case study that really illustrates perhaps the best and maybe the worst that's ever happened with your product and clients?
Well,
each in turn.
I want to take you up on and extend the point that you were going down. I think that the market, in a lot of ways, to Gil's point about attacking the right problem, I think the overall landscape, and I may be off here, so just cut me a little bit of slack, is changed. What I see more happening today is the faster, if you will. It really is a matter of scale. And it's not so much one algo or one data set, it's how many data sets, the volume of those data sets, can you crunch in what time frame? And so scale is becoming a little bit bigger of an issue as opposed to, I just need to be the fastest guy to make a very simple algorithmic decision to get to the market before other people. And now it's a little more semantic analysis. I need to go through volumes of data, and I need to go through it fast and weed through it quickly. In my own case, for the case study that I would bring, is that one of the things that, when I said we want to redefine the database space, one of the things that we do is that you need to find the proverbial needle in a haystack sometimes with data. So the question is, how do you crunch through data at a fast rate and don't deal with data that doesn't provide any value to you? And most of the networks and communication networks that people have put together over the last few years deliver data at a very, very fast rate. The problem is a lot of the algorithms are taking the data and throwing it away. So the throw-out rate is very, very high. So if you had something that could filter that data and only give your algo the exact information that it needs to actually make a decision, you could actually be faster to market with a quality decision okay, as opposed to a non-quality decision. And that's where our software focuses on, which is providing that real-time filtering capability.
You sound like a Google for your data.
Yeah.
I think we're seeing somewhat of a similar trend, and you would certainly classify it as the getting faster, but at speed. It's not easing up on speed. We have to do it that fast, but let's do it smarter at the same time. A lot of our customers, we naturally see customers that are using Java, because that's what we do. And most of the customers that we meet doing Java in a latency-sensitive environment, which is a surprising thing in itself, have chosen to do it because of the trade-offs between productivity, time to market, which Java is generally better at, and the bad things, the perceived slowness, the inconsistency of speed, the freezes. And that trade-off is a hard one. We help make it easier, but we see people certainly moving and trending towards those. And the more they have to change what they do more frequently, the more they choose to use a more productive environment over sheer speed. Algos,
By change, do you mean rewrite their software?
Rewrite
their
their
hardware?
software, tweak it. Algos are a classic example, but I used to think that exchanges are static. How often do you need to change that? Turns out you have to change them a lot. So anytime you need to tweak it, how long does it take you to tweak it? And there's competition that might do it better. So one of the things we've seen people apply in that world, which is very interesting and is similar to, I think, what Jeff was talking about in a slightly different twist, is you have kind of that latency-sensitive wire speed thing that needs to happen fast. How much information is that thing going to take into account when it makes a decision? And people used to do things like algos that have 10 parameters, right? And don't tweak the parameters based on some back-end computation. We're seeing more and more of the cases where they take the algo, and the algo is doing 17 hash table lookups in a 100 gigabyte data set right there on the wire at speed. And that data set is moving multiple times a second, up to date. Some of it is RISC, some of it is models, and it's right there. The low latency, handful of microsecond operation is going and using that data smartly.
Yeah, I'm thinking about an example of a large broker we worked with who was focusing on servicing the high-frequency community. So they had a number of different types of flows, their own in-house flows, some prop flows, market making, and then DMA. And we found that all had different profiles for execution, and depending on how aggressively they traded and depending on where they were trading during the day, that there were different efficiencies depending on, even though they're all going over similar pipes, different levels of efficiency with using our tools. And they were really surprised about the variance in the latency, and that's the thing that people don't seem to capture. And if they do, they're aware of it, and they may do something after the fact, but there's a lot of reporting going on, but not a lot of activity. And that's where we're really able to help people with that, actively doing something with the signal and taking advantage of it in real time. And again, as I said, they were very surprised that it varied across the 3 different execution scenarios. And it could be anything from 10 microseconds to 35 microseconds. How they put a value on that also varied by the individual group. So I'd love to know what the value of a microsecond is.
It could be billions. Sandy, do you want to address?
Sure. So the value of microsecond or anything, it depends on what you want to do with it.
Yeah.
Generally, I think you can think of it in maybe 3 buckets. Speed would typically be needed for one of these 3 reasons. Number one, you have to react to the market itself. You're sitting in the market, something happens on bid, ask, deep in the book, whatever it is. But the market itself is something you have to react to. The second is, there is some legal structure between various markets. You're trading Chicago, you're trading in one market in futures and cash, whatever, but you're reacting in one market based on information in another market. And third is, you're collecting information from multiple places and you're processing it in your own way and then reacting to it, in which case processing becomes quite important on what you're trying to do. Each of this has a very different answer for what is the value of a microsecond. I think you specifically asked for a case study, and I generally, when I'm sitting in the audience, I want to hear something specific. I don't want to hear something, so I'm happy to share one piece. Take a look at if you were trading between, say, Asia, which is where we trade, and CME, for example. If you were doing that and you had an option of being in Aurora versus Cermak, how would you make that decision? I just shared with you that the latency between Asia and CME is order of magnitude hundreds of milliseconds. Well, order of latency between Cermak and Aurora, I'm sure guys here know better than me, but it is much, much less, couple of orders of magnitude less than that. It would not make a huge difference if that was the source of the value that you were trying to optimize. So this would be a case where faster is not always necessarily better, because you're trying to do a value in a very different way. If you were a pure market maker just in CME, reacting to CME, clearly you can't be in Cermak, because anybody sitting in Aurora would be much faster than you. That's an example.
Do you guys have any questions of each other? Because you all seem like the software guys are actually all kind of addressing the same issue. It sounds to me like.
Well,
but
let
you're
me
doing in
take it to a
different ways.
hardware perspective, which is that, Mitch, maybe we'll get a little bit of questions going. So if I was in most of your shoes, I'd have a healthy paranoia. And the reason is that if we were sitting here probably 3 years from now, this would be an interesting conversation to look back at, in the sense that the Moore's law, in a sense, is actually going faster than what Moore predicted. The speeds and feeds are getting faster, and it's not because of what people used to think of Moore's law, which is the doubling number of transistors, and what they were used for. They were used for single-threaded performance. And what's happening now is we're going to sit here probably 3 years from now, and we're going to see machines that have hundreds of cores. And not wimpy little cores. I'm talking serious cores where you can do serious work. And the smarter aspect of what we're talking about today when applied to hardware means if you're a software guy, to get the performance and scale to fend off new entrants, right, you're going to have to be phenomenal at parallel programming and extracting value from these reams of data to make decisions that are interesting, because you're going to have competitors that are going to be with newfangled skills, right? They're going to come into the marketplace and be able to do amazing things, right, with the types of computers that are going to emerge over the next couple of years. And we're talking about every piece of the stack getting faster, which has really never happened. We're talking about communication networks, going from 1 to 10, accelerating to 100. We're talking about storage going from slow spinning disks to moderately fast SSDs to ridiculously fast types of flash storage, and maybe even PCM within a couple of years, which is basically even 100 times faster than our flash today. And the number of CPUs going in a direction that we haven't seen. We know this. We just tested a piece of software on a machine that kind of blows my mind. It's a Ivy Bridge-based computer. So Ivy Bridge is a pretty good CPU. It's not a wimpy core. And this system had 320 cores and 6 terabytes of memory. That is a phenomenal machine that in years past would have taken an entire couple of racks. And this is I think it's in a 8U configuration. That is amazing. Imagine what you could do with 6 terabytes of main memory and 320 cores to crunch through data to make a decision in milliseconds. To your point, it doesn't have to be microseconds, because you could be doing something that nobody else could be doing. And that's incredible.
I agree. Software, you guys, are you all threaded software?
Well, in our history as a Zool, we built hardware. And we actually made machines with 864 cores in them, with a moderate,
not those kind of cores.
768 gigabytes of memory about 6 years ago. We stopped doing that because these Ivy bridges are damn amazing. So, I mean, we made hardware when we couldn't buy parts that were good enough, and we converted to pure software on Intel, mostly Intel and AMD and such, because the commodity hardware has gotten to be great. Really, the scale of those systems, what used to be toy computers that came from PCs and happened to run in servers, is it's no longer the case. The server architectures are truly scalable. I think when we tie latency together, there's a couple of things that, I know you'd like to talk about the scale part, and I think that latency and scale are tied inherently together. When you look at a scalable system, the scale of the system is extremely sensitive to the latency of the parts. And it's not just sensitive to the average latency, it's sensitive to the behavior of latency. If you look at the universal scalability law, for example, you see that things like the 99.9% of latency is the dominant factor in scale in a system. You can have great averages, doesn't help if once in 100, once in 1,000 something stalls, because the bigger your system is, the more things block behind it.
Correct, absolutely.
Tony, do you?
Actually, I'd like to ask a question, probably of Jeff. So it is getting more complicated, but how do you decide whether you're going to do this yourself? Do you do it in-house, or do you have to outsource it? Because it is such a complex problem that you cannot build a team that just can assemble all these things, program them, and keep them as
I think,
current
look,
as you need to be.
I think if you're in this business, you have to assemble that team, or you have to go seek advice from outside. I mean, I think that what's going to happen is we've seen how there was a pursuit of low latency, the high frequency started dominating the market, and then the field levels out. I think the next differentiator in the market, and I think that's what's happening right now, is we're going to find a new differentiator, which isn't the same differentiator it was before, which is now the person that's going to win is the one that can crunch the most amount of meaningful data the fastest. And to do that, you have to be Google-esque. Google won in the search market because they went at a scale that nobody else could handle. And they could give results that people couldn't deliver in the time that they could. The same thing will happen with trading, in the sense that the amount of data today is voluminous, and the only way to crunch it in a timely manner is to parallel process without buying roomfuls of computers, because that's not economically efficient.
So actually, I disagree somewhat. Good. I think that you're right about having to apply that technology, but whether you apply the technology by building the team yourself, the buy versus build part is always going to be there. We actually look at the customer base we have, and I segment it down the middle. We have these latency-sensitive financial services folks, and we have the online website, retail, human response time folks that we do a great job for too. And we found that we need to think of them differently. I call them the crazy folks and the rest. The crazy folks are going to do whatever it takes. And whatever
That's
it takes.
the audience that I was sort of talking to.
Exactly. And that whatever it takes doesn't necessarily mean build it yourself. It's whatever it takes. If there's a good gun over there, let's go buy it. If we need to make a better one, let's hire the people that can do it. And the shift, the ability to make that decision and to change it every once in a while is critical. If you stick to, I build everything myself, I think you become a dinosaur. If you stick to, I buy everything, you're always going to be behind and slow, and you have to have the agility to choose where to invest, where your current excellence comes from, what your core competences are, and you need to be able to shift what they are. If you're not willing to shift them, somebody else will do it better.
Yeah, I think what I was saying was in line with that, in the sense that what I'm trying to suggest is what worked for the last N years isn't what's going to work for the next N years. That's what I'm trying to suggest, and that the one guy that you got, or the two guys that you hired on your team, or women for that matter, that got you the lowest latency may not be the guys that can tackle the next problem, right? Because it's fundamentally a different problem. And they may be able to. There are people out there in the software world that are great at all aspects of the system. But you have to recognize that the game has changed.
Well said, but realize 10 years at the rate of technological change and trading change is almost like 10 generations. It's many lifetimes, almost 10 years down
Yeah,
the road.
no, and what I was very careful earlier in my earlier remark to point out, it'd be interesting to come back and look at this 3 years out.
Yeah.
I didn't say 5. I actually said 3, because 5 is almost
A long time.
a long time, a super long time.
Sandeep?
I'd be interested in knowing,
Yeah.
from your point of view, both on the build versus buy, and how much technical excellence you think is needed to win in your space versus,
Yeah, I would add to
anything.
that also and say simply, what is it, you got three very intelligent people here, very good at what they do. What are they, what do you want from them that you don't have right now, if anything? Assuming that you want something you don't have, but, you know.
So let me answer the first one first. I think from a perspective of build versus buy, you said it in a way that I concur, which is if it is a core competency of what we are doing, then we want to build, because that's why we are in the business, that's why we'll make money, that's why we should survive. If it is not, then I'm a very firm believer in today's world of parsing it out. You know, one of the famed companies in our industry is Renaissance Technology. They are one example of being very vertically integrated from what I understand. They've written their own operating system, they've written their own language, compilers, you name it. We don't do that. And I find it a little bit hard to, maybe that's the myth around the company, but I find it very hard how that example would be a good scalable model.
I would agree with you.
So we tend to focus very heavily on analysis. We write our own analytical algorithms. We code the actual strategy that is going to do the work. And then we will go and buy components wherever we can. You know, if we, certainly anything in back office and all of that is outsourced for us. We don't try to do any of that. Even where it comes to things like maybe even visualization, because we are trading at a higher frequency than manual. To us, not something we want to spend a lot of time in. We have 25 programmers. All of them are focused on very narrowly building better analytical platform and trading engine.
And what do you not have that you would like from these gentlemen?
That's a tougher question. I was not prepared for that.
Well,
You know, we don't, I think, you know, there are several areas in the technology stack that I think are not necessarily working very well right now. I think we touched on it in terms of looking at the whole system. When you look at the whole system and look at from tick to trade, so to say, and from another value chain, look from, I don't know, Reuters or Bloomberg to trade. There are 2 or 3 different pathways that are going on. And there are many different challenges in terms of putting them together in an efficient way. If somebody solved that, first I think they'll make a lot of money, which is what Bloomberg did in the manual world. But I don't think anybody has done it in the purely electronic world. And second, we'd love them for it, because that's the problem we're trying to solve, and we don't think it's necessarily core, because once it's built, it's done. You know, there's no more innovation in it. But that's something that'd be good. Today I go from one system, you know, you talked about Java, you go from Linux to Windows, you go from one to another, serialization, deserialization, put it on this network card, take it off. I mean, everything kills me. And it's just not useful right now the way the stack is built, which was basically an output of Wintel, where everything was in many different places.
So Tony, I think what you guys do in a way helps rate or choose which of those paths are better now and how they're
Yes,
behaving?
I mean, there's a lot of components between the time you send your trade out and things can happen in the exchanges and between you and the exchange. And we don't specifically identify what it is or where it is, because that's impossible to do because it changes dynamically. But we do, in real time, identify what the latency is and rank the different sessions. And if you use that, that's of value. The thing that's, I think, people are missing is that people will have a project to improve latency, and they've done it. And in my mind, nowadays, that will last for a year or 2 years. I think you have to have something that continuously improves latency, as opposed to, you know, we threw this hardware.
Yeah,
we
I
did
think
this.
that just even the mere, say, improved latency is a misnomer. I mean, improving latency is more about improving your ability to get the right decision in a time frame that you can execute on. It's not so much, I think too many times the engineers focus on this little piece because it's measurable. And what oftentimes they need to measure is sort of, in a crude capitalistic way, it's the profitability of the time spent executing. And that is often harder to do because sometimes you don't know, right, if you were slightly faster or slower, would you have made more or less money?
So,
Yes.
you know, this understanding of the behavior of latency and impact is one of my pet subjects, as you probably know.
I'll
One of
have
the
to
things,
disagree with you on that then.
one of the things I often find is people do focus on that number they can measure, and they'll spend weeks and months improving the number they can measure with no actual benefit coming and actually working perhaps on the wrong side of the problem. A common thing that I see is that people will focus on a number that's easily measurable. So we're talking about latency and we're talking about speed. How many of you here care strongly about the average latency of your operations? I mean, that's what you want it to be faster, right? Come on, be honest. I often ask people, like, how many of you care only about the better half of things that happen in a day, but the other half doesn't matter at all? And very few people will agree that, you know, half of the stuff could be as bad as you want. I'm just happy with the good half. But when you look at medians, when you look at averages, usually making that kind of statement, you're literally saying everything above that doesn't matter. I'm not working on that. I'm working on that number I can measure. And most of the problems we see, both in scale, in choices, you know, the latency to different venues doesn't stay the same. It varies, which is why you have a business. And knowing which one when is bad and how does bad behave is where a lot of risk and a lot of opportunity is. I call that volatility of latency or latency volatility itself. There's opportunity there. If you understand that latency is not some Gaussian wave that everybody sees the same way, you can do a lot with that.
You think it's nonlinear?
I study it a lot. I look at hundreds of latency graphs. So I'll give you two theories. One is it is always multimodal. It's got exact numbers like quantums and little noises around them. Another one is if you look at an evolved system and you see latency here and then it jumps up here and jumps up here at different percentiles, those jumps tend to happen at even number of nines. It's a natural law. It's a natural law of engineering. The reason that happens is because somebody told the engineers to make the 99th percentile good. So they made the 99th percentile good. Guess what they sacrificed to it? Everything above the 99th percentile. That's why it's not a Gaussian curve. That's why it's not linear.
Well, certainly I would say from listening to these very erudite explanations, everybody's in favor of intelligent, smarter versus faster, and faster comes from smarter. Does anybody have any questions for our panel?
We're used to handling structured data historically in this industry. Quotes, ticks, executions, etc. The last 4 or 5 years, we've seen a lot of firms looking at unstructured data like social media, and they're parsing blogs and various things. What are the challenges that you're seeing in that space, if anything, and where do you think that's going? Unstructured data.
I think it's an interesting question. You'd probably get a different answer from people that do that every day. And the people that do that every day are Google, IBM. I think the question always becomes when you do that is what's the quality of the result? So I know that when IBM did Watson, that was part of Watson is that they could search their entire database with the artificial intelligence that they had built into Watson, but they had a scoring system based on quality of answer. And I think that if I was trading off of a news feed or sets of news feeds and doing that, it's how confident am I that the result that I got from very fuzzy, it used to be this thing called fuzzy logic, from this almost fuzzy logic type of system, how confident am I that that is something that's tradable and actionable? Because if I'm wrong, I could be very wrong.
The hash crash, when they hacked the Associated Press's feed
There you go.
and said Obama was shot and the market tanked because no one checked out the quality of that
Correct.
information.
That's exactly where I'm going.
Yeah.
Well,
I think there's a whole component yet. It's almost like a feedback loop. So we're at the point where we can analyze the data quite quickly, but where is the control system that would moderate that answer?
So I think the question isn't really about structured or unstructured data. It's these weird amorphic data sources that we have beyond the market data we're used to and the actual orders. Because if you look at how people actually use these feeds of data, they use it in a very, very structured way. It's massive and it's big, but you look for keywords like plane crash. That's looking at it not as, what is the current trending word and does it make English sense and should I learn from it? You're looking for specific things usually. And that's basically taking these massive feeds and trying to apply some sort of a indexing and collating and structuring to them. And it does seem to work for people. The weird thing, not weird, the trend that I see is people are trying to extract sentiment out of massive data sources. Right. And that thing about, is this an accurate measure of the sentiment is a good question. I think that's a philosophical question because it feeds on itself, right? I mean, if they reported it wrong on CNN, would it be any different? When the election is reported, one way or another and reversed later, that's no different as well. And it's the quality of the source is there, and people make bets on whether they're guessing right at what the sentiment is and out of it.
Are there any other questions?
Actually, just one quick commentary. You mentioned the hash crash, but I think that was more of a correlated event processing problem where someone didn't test it. They saw that data point once, but didn't find another resource to prove that that was right, or didn't care, or didn't write that into their program. Because most programmers or algorithm writers usually put in a fail-safe so that doesn't happen. So, but in general, watching the way everything's advancing and having to be able to be prepared for instances like this, but also remain fast, I can imagine the crunching power has to be pretty fast and pretty good. And I think you guys made a great point of putting that out. Thank you. So not a question, just a commentary. Thanks.
Thank you.
Any other questions? Well, I guess we have a few more minutes, so why don't we just kind of have a closing point from each of you? Sandy, if you want to start up.
Sure, I think mostly I'd be repeating what I said, but I think the key from your perspective is in this particular area, just focus on the business problem. From my perspective, that's what you should do, and look at the system holistically. That's the summary, I think, of two things that at least I'm taking away that was confirmed as we talked through this. And as long as we are doing the overall, and maybe if you have time, I'm happy to share one more specific example. In one of the exchanges we work in, there is a particular method by which they pick off orders. When you submit order on the API, they will not process the next order, or they'll not DQ it unless they've gotten acknowledgement from within their matching engine. So I could have a very fast engine pumping orders at an unbelievable speed. It's just like going in, I don't know what is the equivalent, but it's going into Lincoln Tunnel and sitting there. You could drive as fast as you want on 95, but if you want to get into New York City, you got to go through the tunnel. So looking at the system, very important. The second part, I think we already talked about, look at the business problem. I don't know if I can make any more specific comments on it, but that's the crux of it. Business is business. It's been the same way since people first started commerce.
Thank you. Tony?
Just picking up on the tunnel aspect of it, I think there's an exchange here in Chicago that's building a tunnel at the moment. We'll see how that works out for them. But typically, there's multiple routes, right, to get home or to get where you want to get. And what we do in real time is find those routes, make them available to people. I would encourage people to experiment and not assume that what they have is ideal, because there's gaps and there's holes in there. There used to be a time when everybody thought most of the latency was in the application, and then it moved down to the switch, and throwing hardware at problems typically doesn't make them go away. I would encourage people to experiment and see what's going on within their systems.
Thank you. Gil?
So that, one of the things I see is around here is latency is a relative term. Whenever I hear people talk about the race to zero is over or the latency race is over, I think that's funny because it's never going to be over. We're in an industry where people are there to win, and usually it's the people who are losing that say, let's stop. So, you know, you might have been ahead and you don't want to spend all that money because so I think the race is never over, and as an arms vendor, I think that's a good thing for everybody. But latency is relative, whether it's microseconds or sub-microseconds even in equities trading in the same exact rack, or milliseconds or sub-milliseconds in sort of an FX or FIC environment, or cross-geographical venue, you're talking about tens of milliseconds or even 100 milliseconds when you've got enough of a globe to circumvent. The relativity of that latency between what you do and what your competition does and what could move while you do it is a big thing. And each of those has its own opportunity within that scale. So there's a lot of opportunity in getting the right guesswork of how has the world changed in 100 milliseconds when you can't see that far, or in 100 microseconds or in 100 nanoseconds. So it's just a relative term between them. To me, understanding what the meaning of shifting of latencies is to you is critical. I would say if there's one recommendation I would say to the audience around latency is study what it is. Look at what it actually is, not what some lab measurement told you, and don't hope for a number. You're going to be looking at shapes and graphs, or you're not looking at the right data. And measuring reality all the time in the real world and making decisions based of it is a better way of, it's smarter. It's a better way of making those decisions. And if you do that and others don't, you'll hopefully win. If you know, you don't do it, others will.
Thanks, Gil. Jeff?
Yeah, I would say that, you know, what I'd leave you with is that faster is indeed smarter, but there's a new era where that's going to be applied. A new era of computing is what I'm talking about, where what you have to do to be smarter and faster at the same time is you have to crunch more data points to make higher confidence level decisions that when you execute, you actually will win as opposed to lose. And the arms race, I believe, is shifting to players in the marketplace that can tie their 25 programmers together in a way where they're not making point algorithmic decisions, but where they have a feedback control system, if you will, that's tying those decisions together in a systematic way and adjusting that on a timely basis.
Thanks very much.
Thank you.
It's excellent, guys.
Thank you, gentlemen.